The Nifty 50 index oscillated in a broad range of 611 points throughout the week, showcasing restrained volatility as the India VIX declined by 7.69% to 13.05. After a week dominated by range-bound sessions, a significant rebound on the last trading day ensured a positive weekly close. The Nifty advanced by 90.50 points, or 0.37%, to finish above key resistance levels, supported by gains in technology and banking stocks. On the broader market front, the BSE Sensex rose by 0.5% to 82,133, while the Nifty Midcap 100 gained 0.5% and the Smallcap 100 declined by 0.4%. The market's ability to maintain gains was bolstered by sectoral rotation and selective stock-specific action. Nifty crossed its 100 DMA at 24,709 after facing resistance at this level in prior sessions. To sustain the ongoing technical pullback, Nifty must remain above the critical 24,700 level. Immediate resistance is identified at 24,790 and 25,000, while support levels are positioned at 24,590 and 24,400. The weekly RSI stands at a neutral 56.37, indicating no divergence with price movements. The MACD remains bearish, staying below the signal line. The Nifty's recent rebound from its 50-week moving average highlights the significance of this level as a strong support. This recovery followed a sharp corrective phase during which the index tested and respected the 50-week MA. On the daily chart, Nifty's close above the 100 DMA suggests potential for further upward momentum. In terms of sectoral performance, the banking, financial services, and IT indices are poised for outperformance, while the pharma and midcap 100 indices are showing signs of a slowdown in relative performance. The FMCG, energy, media, auto, and infrastructure indices are expected to underperform relative to the Nifty 500 index, whereas the PSU bank, realty, and metal indices are positioned for enhanced relative performance. Looking ahead, key factors to monitor include global monetary policy meetings, particularly the Federal Reserve's final 2024 policy meeting on 19 December, where a 25 basis point rate cut is expected. Investors will scrutinize guidance on growth, inflation, and 2025 rate projections. The Bank of England and Bank of Japan are likely to maintain steady rates, with inflation trends and fiscal policies remaining focal points. Economic data to watch includes December's manufacturing and services PMI flash numbers from the US, Europe, and Japan, as well as US retail sales, industrial production, personal income and spending, and jobless claims. In India, December PMI flash data for manufacturing and services, November WPI inflation, RBI monetary policy minutes, and foreign exchange reserves will be released. Institutional activity shows that foreign institutional investors recorded net inflows of 11,707 crore rupees in December, despite minor net outflows last week. Domestic institutional investors contributed net purchases of 2,880 crore rupees for the week. The rupee remains under pressure, touching a record low against the US dollar. The IPO market is expected to be active with several main board and SME IPOs opening for subscription, including DAM Capital Advisors and Transrail Lighting. Commodities show that Brent crude prices increased, staying below the 200-day EMA, which is favorable for India as a net oil importer. The US dollar index rose, adding pressure on emerging market currencies. From a technical perspective, sustaining above 24,700 could drive the Nifty towards 25,000, while a breach below this level may lead to a decline to 24,500 or lower. Maximum call open interest is seen at 25,000 and significant put writing is observed at 24,500, indicating a wide trading range. The decline in India VIX signals reduced volatility, which is encouraging for bullish sentiment. A series of board meetings and dividend announcements are slated for the upcoming week, which may influence market movements. The Indian equity market is expected to consolidate within a broader range in the coming week. With a packed economic and corporate calendar, global monetary policy outcomes, macroeconomic data releases, and IPO activity will play pivotal roles in determining market trends. While subdued volatility supports bullish sentiment, traders should adopt a cautious and data-driven approach to navigate potential fluctuations.